Hi, this is Merrill with Tax Tutor. I want to spend a second and talk a little bit about tax planning for W-2 income. The unfortunate part is W-2 income is very difficult to plan for. Several years ago, there used to be an itemized deduction that was unreimbursed employee expenses. And so if you received a W-2, you're considered an employee, and if you have expenses that are unreimbursed by your employer, you could deduct those as an itemized deduction. Back in 2017, with the Tax Cuts and Jobs Act, they got rid of that deduction on a tax return. So an employee that has unreimbursed expenses, they have no place to deduct those anymore. So we look for other ways to help employees save money on taxes. The first part that's important to understand is that when you get your W-2, there are various boxes on that W-2. The most important boxes for tax purposes, for income tax purposes, is box 1 and box 2. Box 1 represents your taxable income. That is the number that is required to be reported on your return, and the IRS is going to match box 1 of the W-2 that they receive from your employer with the amount of wages that are reported on your return. And if those two numbers do not match, the IRS will send you a notice and ask why there is a difference. So when your employer gives you a W-2, whatever is in box 1 is what has to be reported on your tax return. Box 2 represents the withholdings that you had taken on those wages and gives you basically a credit on your return for the taxes that you've already paid. Boxes 3 through 6 aren't important for income tax purposes, with one exception. So box 3 and box 4 represent FICA income. And box 4 should be 6.2% of your box 3 number. Box 6 should be 1.45% of the box 5 number, because the 6.2 represents the FICA tax and the 1.45 represents the Medicare tax. Now, the FICA tax gets capped at around $140,000 of income. So if you have multiple jobs, let's say, and if you were to add up the W-2 income from those two jobs, and if it was over $140,000 between the two of them, then chances are you had too much FICA tax withheld, and you would get a credit on your income tax return for that excess FICA tax. So that's the only time that we see that FICA tax being impacted or being represented on a tax return. Otherwise, it's just box 1 and 2. And for most people, it's really just box 1 and 2 that get reported on that return. So, since box 1 has to be reported on the return, you can't deduct unreimbursed expenses to offset that W-2 income. What are some ways that a W-2 income earner can save money on taxes? Well, the first way is you can reduce your box 1 income. Now, to reduce your box 1 income, that all depends on the benefits that you get from your employer, such as 401ks, HSAs, and other things. So to figure out how to reduce your box 1 income, it really is looking at the benefits that you have through your employer, or the benefits that your employer offers, and which of those benefits help to reduce your taxable income. So if you have a lot of extra money, a lot of extra cash coming in, you could look at maxing out all of those benefits that are available to you. That will reduce your box 1 income, which will then reduce your income taxes as well. There are other ways to reduce taxable income on the tax return also. Some of them apply more than others. So these options are, if you are a school teacher, you can deduct $250 of unreimbursed expenses that you have for your students, for your classroom. $250 deduction is not a really huge deduction, but every little bit adds up and helps. So school teachers can deduct the $250 there. If you are have a health plan that's HSA compatible, you can actually open up an HSA personally yourself and contribute to it if your employer doesn't have an HSA available to you. Or even if the employer does have an HSA available, you can still open one personally. So either HSAs can be done through an employer or through yourself personally. You can make an IRA contribution, but again, those can be limited. They're limited to $6,000, and if you're covered by an employer retirement plan, such as a 401k through your employer, depending on your income, that might not be available either to help you reduce tax. Student loan interest is deductible if applicable. Sometimes people make too much money and then that starts to phase out and then they're not able to deduct their student loan interest, so that may not be an option either. Then there are a number of itemized deductions. You can deduct state taxes. However, currently those are capped at $10,000. So once you reach $10,000 between your income tax and property taxes, then you can't deduct any more of those. So that phases out at a pretty small number. You can deduct mortgage interest, but that gets capped at a $750,000 balance. So if your mortgage is over $750,000, then that deduction is capped and you can't take more of that deduction. There's medical expenses, but those must be over 7.5% of your adjusted gross income to be deductible. So those three itemized deductions are helpful, but there's caps and things in place that limit those. There's also charitable contributions. So charitable contributions could be a really good way to help reduce your taxable income. Those go through various limitations. At times they've been subject to 50% of your adjusted gross income. So if your adjusted gross income was, say, $100,000 and you contributed $80,000 to a charity during the year, it got capped at $50,000 because it was 50%. So sometimes it's 50%, sometimes it's 60%. We currently have a scenario where they are allowing the 100% deduction for cash donations. So if you make a cash donation, you can deduct 100% of those charitable contributions. So that could be a way to reduce your tax and your income. So those are tax planning ways for W-2 income. As we kind of went through, you can tell that they're very limited, but there are a few options out there. If you enjoyed this video, I'd appreciate it if you please hit the like and subscribe buttons below.